What's up, everybody? Jonathan Rose. Today, we're going to talk cannabis. I get lots of questions about individual stocks, and recently, with the volatility of Tilray, I've got a lot of questions talking about, hey, should we buy puts? Should we buy calls? Should we get long the stock? I want to go over Tilray. I want to tell you my thoughts. Before I do that, in the comments, I want to hear, what do you think about the cannabis industry? I want to hear, do you think cannabis will enter healthcare? Do you think cannabis will be legalized? I'm kind of torn. I think they'll enter healthcare in some capacity, but more against on the opioid side, I guess. I don't really know. I'd love to hear your thoughts. Leave them down in the comments. Let's all learn together. So Tilray, if you've been living under a rock, you're not aware of this story, but most of you are. It IPO'd at $17, opened at $20, ran all the way up to $300. Right now, Tilray's up about 800% since its IPO price. That's a little bit kooky. Or is it? Let's go over here. I've got NASDAQ, and I just pulled up Tilray because I want to go over their offering. Tilray, 330 employees, share price. Shares offered at the IPO, 9 million shares. The offer amount, 153 million. How do we get to this number? 9 million times 17 equals the offering amount. Less expenses. This goes to the underwriter. The responsibilities of the underwriter are to price the stock, but also to support the stock above the price that they value the company at. So right now, I don't know about you, but it's got to be embarrassing for the underwriters because they did value those 9 million shares at 153 million. If they thought the stock was worth $300, they would have valued the stock at a $300 valuation for the shares that were offered. They obviously don't. So right away, either the market's right or the underwriters are right. You got to think like that. Let's go further because we're going to get some really valuable information. And the shares outstanding are 75 million shares. They only offered 9 million. I wonder what would have happened if they offered 75 million. Would the stock run up to 300? Absolutely not. No freaking way. But what they did is they offered a very, very small piece. They offered 9 million. They wanted to give the market a taste. The market liked what it tasted. Oftentimes, companies will offer out some more stock at these higher levels. Tilray hasn't done that yet. 75 million shares outstanding. The lockup period is 180 days. It's pretty common to lock up stock for 180 days. After 180 days, the shares outstanding will be released on the market. So those who own and who are up 900% will then be able to sell their stock. Probably going to push that stock down. The lockup expiration, January 15th. Quiet period expiration. This is something we don't talk about too much, but it's important. Quiet period, what does that mean? Well, first let's look when it was. Here was the quiet period. Quiet period, it gapped up. Now, I don't know about you, and that doesn't look like a big move on this chart. But if we look at it a little closer, the high was 43 and it opened up at 52. At the end of the quiet period. Now the quiet period for an IPO is the day that the company could start marketing. The company could start advertising campaigns. The company could start promotional campaigns. So right at the end of the quiet period, Tilray starts to move and then it gets silly. To me, that's really interesting. All of a sudden, they're allowed to market it. They're allowed to promote the stock. And that's kind of like the start of just craziness. Now, what's actionable? Well, there's really nothing actionable. Can you do a lockup trade because the lockup's going to come January 15th? You could. But if I take you over to the options, and this is what I keep telling my members who email me about questions about Tilray, in order to get the lockup, you need to be out in January. Tilray's at 164. The straddle's at 120 bucks. If the stock's at 164, let's do it 165 so I can do easier math. 60 plus 40, so that's $100. So the straddle is pricing in $100 lower or $100 higher. It's just insane. If you want to buy puts in this thing, does anybody want to buy puts for $6 on the 60 strike? To buy a 10 lot, $6,000? That you only have a chance of making money if the stock gets under 60? Not if you worked hard for your money. Forget that. The options are too expensive. Can you sell those? I don't know. This thing could trade 17. I wouldn't sell them. It's a horrible risk reward. Volatility is just out of control. Try to find another stock in the universe that's trading for over $150 that's got over 100 volatility. You're not going to find too many if you find any. Learn, guys. Learn, because you would notice the quiet period. You would know the lockup expiration. You could follow Tilray from a different perspective. Instead of looking for trades, you would recognize that, hey, let's just sit this one out. Let's watch this game. Let's try to find the next Tilray. Or try to find a way to hedge Tilray. Maybe there's something it's closely correlated to. We could buy that and sell Tilray or buy puts in Tilray. So overall, this is an educational video. The overall message is don't freaking touch this. Don't just run to the shiny object syndrome, what everyone's talking about. Stay away, okay? It's cheaper to stay away from this name because your risk is way, way greater than your reward. Hope it helps. Curious to hear the comments about what you think on the cannabis industry going forward. Thanks, guys. Jonathan Rose, Active Day Trader.